Good afternoon, everybody. This is Dennis Wilborn from the Active Trend Traders and David Grandy from All About Trends. How are you doing, Dave?
I'm doing great. Looking forward to another good webinar.
Oh, cool. Yeah, so am I. It's been a lot of fun doing these with you, and I appreciate the collaboration and all that kind of stuff. So what did you think about the market this week?
I think we saw a lot of improvement here, a lot of stabilization, and there's a lot more trades on both sides of the market setting up. So it's in much better shape than it's been the past 7 weeks or so.
Yeah, I kind of just spent my time this week. I took a couple of long positions. One particularly in Tesla, but it was bouncing off a support level. It seems like, and we'll see it on the charts here shortly, that week before last, the market went from from support up to resistance, and then this past week, 2 weeks ago, it went from resistance down to support, and now this week we've gone from support back up to resistance, and we'll see that in the charts definitely. I just want to remind everybody that Dave and I are not making any recommendations about any particular stock to buy or anything like that. The material here is for trading purposes only, and traders should always paper trade as they're testing out any type of new method before they risk their own personal capital. I'll hit everybody again with the same chart that I put up last week. Is just a consideration of any type of system, whether it be the All About Trend system or the Active Trend Trading system. You're going to have 5 pillars that make up a good, sound, crisp, has a good, strong basic system. It's going to tell you what to trade. Both Dave and I support very much the real strong growth stocks that basically are IBD type quality stocks that pass their fundamentals. It tells you when to enter, when to exit, what strategy to use, and what to expect. And it's through the foundation of our study, knowledge, and experience that we generate and come into our system. And I promote a system that includes both cash flow or income generating trades and capital growth. Gene asked, I don't know, does anybody else hear news in the background? I do not. News in the background. Gene, it looks like nobody else is acknowledging that, so we'll move on from there. Oh, yes, Rob. Hey, I know I haven't got any noise going on in my background, and nobody. David, do you have anything background?
No, I don't.
Okay. So I don't know if we're getting an extra PR plays. No, sir. Nothing's going on either my side or Dave's side, so maybe there's some interference. Hopefully it will clear itself up. Let's take a real quick look at the market, and I'll come back to, here's how you can reach both David and I. Take a real quick look at what's happening in the market. There's that stock, David, Q. We'll come back to that shortly. As I indicated, the S&P continues to be stronger than the other growth stock, the NASDAQ and or the Russell. We came up to a level of resistance here and then broke through, but then closed back below it to finish the week. So from a daily candle, what I was seeing a lot of mixed signals this week, David. One is mixed signals between the indices, and that today the NASDAQ, the Dow, and the S&P closed down slightly while the Russell closed up slightly. And so and we'll see here shortly on the Russell and the NASDAQ, the daily candles, as the daily candle here on the S&P is a bearish signal. However, from a weekly standpoint, it was a nice bullish signal, bouncing off the 8-period moving average. It was approximately the 50-day moving average, and bouncing on up and closing, with a nice gain for the week. While we move on over to the NASDAQ. There we go. NASDAQ, same type of situation, very similar type situation. We had the rebound that started on Monday of this week, actually. We get a real big sell-off on Monday, get a nice rebound, and then moving back up. A couple of the positives on the NASDAQ is while we have finished with kind of a bearish signal today, we did get a nice little crossover of the 8-day moving average over the 20-day moving average, and that could be the start of a new uptrend. But we do have a lot of overhead resistance coming up here. We still have the 50-day moving average pointing down, and this dash line here is the old trend channel that the NASDAQ broke out of. And so we've come back up to the trend line again, and also the trend, this downtrending line connecting all the highs, came right up to it this week and over the last couple of days, and then have reversed lower. What does that tell us about what's going to happen next week? A couple of things could happen. One, we could continue to move downward, break back down through the 8 and the 20, and retest down in this support area. Or we have another trend line going up. Oops, I don't want my stochastic, I don't want the Fibonacci's, I want another. There we go. We have this trend line here, which we actually made a higher low, but we still need to take out this high up here before the uptrend would be back in play from a purely technical type standpoint. The Russell did okay today, actually. Okay, with the exception of it did put in a shooting star type formation. And for those who were with us last week, and this yellow box up here is the magic fib box that traces out the 62 to 38% retracement from this high to this low. Last week, or week before last, we got up into that resistance area, reversed down. This week, we popped on down to the 200-day moving average, made a great reversal both on Monday and on Wednesday, and bounced back up. But where do we go? Right back to this overhead resistance formed by this downtrending trend line. So David, but on the other side of that, Dave, is we've got the weekly charts showing a nice little bullish type pattern where it's popped back above the moving average and looks like it, but it's still hitting that overhead resistance as the 8 period and the 20 period moving averages on the weeklies are turning over. So we do have some overhead resistance to get through, but it does seem like the market, as you said, stabilized considerably. So any questions, anybody? Expectations for next week? Based on this signal here, it wouldn't surprise me to see, if we close below this low, it would not surprise me to see the market, or especially the Russell, come back, bounce again here, and then pop back up and not make a triangle pattern. Sorry about that. But drop and then pop back up. This, it has to make its way back through this downtrending line to get some momentum that will show the momentum's coming back into the market. So, Dave, you got any questions?
I don't have any questions, but does anybody else?
Not yet. And so, okay, with that, Dave, what are you seeing setting up potentially for next week? I'm going to switch the computer. I'm going to switch the screen over to you.
Okay, well, like Dennis was saying, we've seen some improvement in the market. I guess maybe the best word for it is stabilization. Before, the last few weeks we've been doing this, the market's been all over the place. We were constantly having to deal with the ambush colossal sell-off, coming out of the middle of nowhere where the NASDAQ would be down 90 points in 2 hours or so. We didn't see that this week. The NASDAQ actually broke its trend of closing at the low of the week, which has done 6 of the prior 7 weeks. So, are we out of the woods yet? Probably not. All we did basically was trade up into resistance here, and we could easily, come back down. But the best part of the week though is there was stabilization, and more importantly for us, we're not as concerned so much with the indexes as we are what's happening with leading stocks in terms of setups and the quality of setups. I've been talking for weeks now about how the best time to get into a market is when there's quality setups forming, and there's a lot of them, and you don't really need to worry about which way the market's going to go, because you are in position to profit either on the long side or the short side, because there's good setups on each side of the fence, and we're starting to see that. And I'm not saying we're going to go out and go hog wild here. We're still in the infant stages of an improving market. So, the market is like a fruit tree, if I can use that analogy. It goes through seasons. You have your winter where all the leaves are falling off, and what little fruits left on the tree is way up top, and it's hard to get to. And when you get to it and you bite into it, it usually doesn't taste very good. And that's kind of the market we've been in. But we're starting to see some new buds forming, and some new fruit starting to take shape, and with just a little bit more time it'll ripen up and should taste sweet. So that's kind of how I look at the market right now. Just getting there, but not quite yet. But that could all change real fast. So and there's really something for everybody here. Even if you're a traditional IBD person, there's some good stocks setting up traditional bases that are getting close to breaking out. So it's good to see that. But like I said, I don't think we're out of the woods yet. I think we just need a little bit more time before you'll see even more of that taking place. So just looking at the NASDAQ real quickly here, you can see we rallied back from support here up towards resistance. This red line is probably going to act like a little bit of a magnet and draw us closer up to it, hopefully. That would be better. And then the question is, are we going to break through and will the NASDAQ join the rest of the indexes in getting above its 50-day, or are we going to come back down and break this pink line to the downside and retest the lows or even further? That remains to be seen. The S&P, same thing. We're coming up on some brick wall resistance here. It would not surprise me to see us break this pink line to the downside. And should that happen, we'll be prepared to profit from it. So let's look at some setups. On uptrends, the only pattern you need to know in stocks that are in uptrends is what we call pullback off highs. I go through this every week just to review again. We're looking for stocks that are in confirmed uptrends, still above the 50-day moving average, and they pulled back in an orderly manner towards support, which is usually a prior breakout or the 50-day moving average or a trend line or all three. And here we have Synergy. This stock broke out a couple weeks ago and made a lot of headway real fast, but then got caught up in the profit-taking mode of the markets and has pulled back towards the recent breakout here. And you can also see there's support at the 50-day moving average and the green trend line. So a break above this pink line to the upside would trigger a long side trade, and we'd like to see that happen ideally in tandem with the indexes clearing that resistance that I just pointed out. In downtrends, stocks that are in downtrends, it's the exact opposite. We're looking for stocks that have already broken down, that have pulled back off of their recent lows up to areas of resistance, which is exactly what the indexes have done this week. So AOXN looks just like the NASDAQ. You know, it broke down here, hit a low here, bounced, came back here, bounced off that support, and now has rallied back into resistance. So it's almost a carbon copy of the NASDAQ. So if it breaks the pink line to the downside here, that triggers our short sell trade, and that will probably happen in tandem with the NASDAQ breaking its pink line and the S&P as well. And then Dennis wanted me to talk about Tesla. Here we have a stock. Now this, when you're in a correction, you have to give stocks a little bit more room than normal, particularly a leading stock like Tesla that's had such a big run. So while this stock is not above the 50-day moving average, the pattern is there, and it came below the 50-day moving average because of what's been happening with the market, and there's lots of profit there to be taken. But the structure is there. Here we have solid support here at the blue line. It's pulled back fairly orderly, and it's hit this blue line support twice now and is never closed below it. So what we'd like to see here, ideally, is for it to pull back again towards the blue line, retest that, and then launch higher above the pink line, and we'll be looking at taking a long side trade there. And that, should that happen, that'll probably happen in tandem with the indexes taking another look at recent support before they move higher as well. So, so all in all, in the past, I've been, hey, cash is king. And it still is for the most part, but there are definitely some good setups out there, much better setups, much tighter setups, much better patterns than what we've seen. It's not as sloppy, and the indexes seem to be stable, and we can more easily predict the direction they're headed in than we could before. So it's time to start looking at getting back in here, but tread lightly, take it easy, and just do half positions or something. Just see how it goes before you commit the bulk of your capital towards this market right now. But definitely much better than what we've been seeing in the last few weeks, that's for sure.
Okay, Dave, thanks a lot. Excuse me, I was answering a question. Hey, question for you. One of the questions came up is what's the relationship between All About Trends and Active Trend Trader? Active Trend Trading, other than we're friends who met at a Barry Moneymaker meeting, and I asked you to come and do a presentation for us, and we just felt that we wanted to do some collaboration, right?
Exactly. Yeah, it's like it's peas and carrots. We're kind of doing the same thing, and we both. Well, actually, what started the webinars is I was offered an opportunity to present at the Bay Area Money Making meeting, and I did a quick little webinar before that, and we started taking random questions from folks on random stocks, and it was so much fun, and we both got off the webinar and said, that was fun, let's do that again. So we decided let's just try to do this every Friday, and that's how it came to be.
So, yeah, and while the systems are somewhat different, we're about trading the trend. I have different triggers that get me in on trades than David does, based on my own research and trying to pull together various strong points. We both tend to trade really strong, fundamentally strong stocks that are, IBD quality stocks, and so that's one of the things that David True, can you send me that question via email regarding the Bay Area Moneymakers and Active Trend Trading? I'd be glad to answer that. Dave, one of the things, I'm going to swap back to my screen here real quick.
Yeah, and before you do that, I want to add on to that. The reason why we look at IBD stocks is because for us, it's all about money in motion, and the stock is only as good as its chart. So, the IBD stocks, those that are in the IBD 50 in particular, those are the big movers. They lead the market up and they lead the market down. And we're looking for stocks that are going to make big moves in either direction that we can profit from. So that's, and they're also, when we're looking at buying stocks, we want to be in the stocks that are fundamentally sound. And IBD, as far as I know, has the best, hands down, the best fundamental analysis out there. So if it's good enough to pass their muster, it's, you know, it's good enough for me. And all I have to do now is worry about the technicals.
Yeah, exactly. And my stance is the same as yours, David, in that I don't personally like doing fundamental analysis, although I've been working in the market now since 1988. But I still don't like fundamentals, but I love technical analysis. And so having a pool to fish from is really, really great. Yeah, so let me pull back just real quick, David. There's a couple of stocks I want to show folks, and then we'll get into asking questions. One is Tesla. Tesla, the active trend traders entered Tesla this week down here as it bounced off the 100-day moving average, coming out of this area, this zone of support. With the anticipation it was going to move back at least up to approximately the downtrending line. And so we'll be looking to potentially either close that if it fails to break through here, or if we get a little pre-earnings run. Earnings on Tesla are coming up on the 7th of, which is next Wednesday of May. And so we'll be looking to close that out for a short gain. And then another one that one of the other areas that I focus on in our premium service with active trend trading is income generating trades. And one of the ones we've been trading here shortly is QIHU. And David, you were going to talk about this one also, but the oh, come on, excuse me, that's my alarm to tell us that our time is just about up for the broadcast part of it. We'll go into questions next. But QIHU came up, found support down here at a support zone, and is bouncing up. It has earnings coming up also. But I like the story on QIHU, the Chinese internet stock, and so what I said to myself, I want to own this stock long term. And so I bought a position back on the 20th of March when it was basically up in here, and then I started doing short-term using weekly options to generate weekly income, and so far I've actually bought down my cost basis on this from 106 down to my new cost basis on QIHU in a month's period, well, since the 30th or 20th of March is $83. And it's like having a really
outstanding. Nice job.
Yeah, and so that was about $4,700 worth of cash flow for the month. And so that's and that's some of the other things. And Q is also looking really good. Kind of trying to make up its mind, reclaim the 200-day. And I'm looking over here and I'm seeing I'm a candlestick certified candlestick technician also, and we got a really nice hammer on the weekly chart. So any slight move up, it's going to break through this the downtrending resistance. It will hit resistance about the 94, 95 level. But if we restart a new uptrend, if this is the bottom of the cup, we could definitely see a move back to the 120 range. And so, yes, Barbara, I sold calls and naked puts against Kihu. So those are a couple that I'm looking at, and one of the other holdings that I'm holding right now is GasLog. Basically, this has been a nice steady uptrend. It bounced this week. I missed all this move back here, but I said this is a steady mover, so this bounce off the 20-day moving average was an entry for us. We're in the trade, and there is a channel here. There's a trend channel. As long as it stays within the trend channel, we're fine. So with that, David, I'm going to stop the recording.
Well,
and just
if you want to flip over to me real quick, I can.
Do you have that?
Add to that a little bit. Yeah.
Great. I am making you the presenter, and I'll answer some more questions.
Okay, so here's a QIHU that Dennis was alluding to. Pretty much the same, markups that he had. But if you like that one, I'll scroll up here and take a look at Google. Same exact pattern, birds of a feather fly together, I guess. Almost identical. So, what we'd like to see here is it come back down one more time and retest this level and then launch higher. And then on gas log, I have that here too. You can see it's got a little mini pullback off lows pattern here, so wouldn't be surprised to see that come back down if the indexes continue to meet resistance here, and we'll be looking to pick it up right on this green trend line. So those are my thoughts on those three.
Cool. So, Dave, we're actually having some stocks to talk about this weekend. That's like
great?
Really amazing. So
yeah, I told you guys at some point we're going to start having fun here, and we are. So that's good.
So okay, I'm gonna stop the recording and just we've got a couple of questions that we can answer, and